Alright, today's Tuesday, May 11th. It's about 2:15 p.m. And here we are looking at a chart of the Euro US dollar daily chart. And as you can see, we started off this week on Sunday. We had a nice gap up and a run up like expected before we came crashing back down. So we initially talked about a few places where we would be interested in getting short this market. Now the most ideal place would be, this daily trend line. But unfortunately, we figured price wouldn't come up there because of the selling pressure we'd be seeing recently. So we dropped down to a 4-hour chart and we're watching some of these key levels. One of them was this line right here, so a tag here and a tag here. But again, we said that we had many bars down in a row, and eventually sellers would reach a point of exhaustion, and at that point there would be a short covering rally. So we didn't want to get caught in that, and that's pretty much exactly what we got. We opened up on Sunday and we actually gapped above this line and ran right up into resistance. Right. So initially we didn't have this line in. We had these lines up here. So we were looking at this trend line tagged from this point to this point coming down, and we're also watching this point of support resistance, this swing low right here. Now there's another key level in here, which was the 3100 even level, and we were very close to that. So we actually made it all the way up to 3094. So even though we didn't get up to the ideal entry, there was still a great play here. Now unfortunately I missed this because I was away from my computer, but looking back we can do some analysis here. So as you can see, now we're dropping down to the 1-hour time frame, and it's pretty clear that we gapped above this. We came back, retested this line, and then continued to push up. However, when we got here, we had this inverted hammer formation. Now all this is it's just a bullish candle, right? Price came all the way up here, but some point before the close of this candle, the sellers came back and pushed it all the way down into the range of this bar. And then after that, they continue to push it down. So these are generally pretty bearish, and this is a great example of one working out very nicely. So next question is, how do you get in these? Well, there's a few ways. The first way is probably the most aggressive. Obviously there's no guarantees in trading, so sometimes these patterns do fail, and a failure is a move above the high wick of this candle. So if we enter right on the close of this candle, we get a stop of about 55 pips, give or take, and that works out nicely, and that's a more aggressive entry. A more safer entry where you have confirmation is when you take a break of the low of this candle right here, right? So you take a break of the low, and that will give you about a 75 pip stop. Now for me personally, both of those stops are too great. I like to use a 12 to 15 pip stop ideally, and if it's anything more than 30, then I will scale down my position. So what I would have done is I would have waited for some retracement on this candle. So a good way of doing it is if you take your Fibonacci tool and you draw from highs to lows or lows to high, and if we zoom down to a small time frame here, you will see that I would have entered on a 50% retracement of this, and that way you have some sort of I guess a smaller stop loss. So my entry would have been in this area right here at 3060, and again the stop goes above the high of this candle, so that gives us approximately a 40 pip stop. So that would be a reduced size trade for me. Now the thing you have to realize is I missed this trade, so everything I'm saying is just in hindsight. Often it's really hard to say this is exactly what I would have done, but looking at my my trading rules and my trading style, this is how most likely I would have executed this trade if I had stuck to my my plan. Now after that we came crashing down. As you can see, price right now, there were a few trend lines that we had in here, this point and this point, and as you can see we broke that very nicely, so price is just making its way down, consolidating a little bit. In terms of targets, we do still have these extended targets in the daily, these 2009 lows. So this would be like the first target right here, 2450, and then down here we have 2320. So I would expect some buyers to come in here, and some shorts to be taking profit at that point. So what about the rest of us who didn't get into this trade? Well, there's a few options. You know, you can take more of a risky entry and get in somewhere here, which I would not personally do. Personally, if price does manage to retrace up into this zone, I will go get to short again, because we have this daily line and also these other levels of resistance. So until then, I'm just going to sit back and let price do its thing. Thanks for watching.